Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jeff Kilburg, Chief Investment Officer with Sanctuary Wealth. Jeff, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Great to be here.
All right, let's take a look at the commodity complex today because there is some movement. What's happening with energy? We know Hurricane Ida has just turned into a hurricane, but there really has been quite the move in oil as of late.
There is. I think it's really important to understand where expectations were for crude oil to be going into triple digits, above $100. We didn't see that. We saw a pullback. Certainly the U.S. dollar index, which is being influenced by Fed Chairman Powell and his virtual meeting at Jackson Hole, but that is weighing a bit. And now that you've seen this reset in commodity prices, we are thinking that maybe that back and fill, that consolidation was actually quite healthy for WTI. But here we are again trying to figure out the whole inflationary component on top of the U.S. dollar index, on top of Fed policy. So is that going to be really allowing WTI to move higher? But I think the bigger picture, the overarching theme is the global demand. And that's the Delta variant, which we just can't really get our arms around.
That's a great point, Jeff. And of course, gold also was impacted by what we're seeing with the dollar and of course with Powell's comments.
Well, gold has just been a kind of a sideways trade, which is great for traders. It's an opportunity to get in and out of gold. You have to be very nimble, very quick. But nonetheless, we haven't really seen, we rewind 3, 4, or 5 months ago, people were getting excited again about owning gold for inflationary reasons. But again, Fed Chairman Powell has talked really deep dive talking about how this inflation is transitory. So as long as we believe him that inflation is transitory, then you're not going to see that bid in gold, but it is providing a trader's delight.
Yeah, and I think transitory, that word, it just continues to be so confusing, especially with what we're seeing in the labor market. We know that employers are offering all types of incentives and have significantly taken up their hourly rates just to attract some sort of labor into their stores. That's not transitory. You don't pay someone $20 an hour and then reverse course once we get people back into the market.
You're absolutely right, Jill. And the fundamental flaw, I think, with the federal government, the way they measure inflation, they strip out food and energy. Look at myself. I clearly like to eat. I love to drive my vehicle. So it's really hard to understand how they're calling it transitory. But I think in the bigger picture, we are going to see a tangible component of inflation. I don't know if it's 22, 23, what year we actually see that, but that's when they have to react. But right now, what he signaled today from the virtual meeting in Jackson Hole is that they're not overly concerned about inflation. And I know that it's really an upside down equation, but nonetheless, we have to trade the markets in front of us, Jill.
And Jeff, to wrap up here, and that's a great segue for this, we have geopolitics now involved with the market, right? The market's always worried about something, whether it's interest rates, inflation, the Delta variant, now, of course, what's happening in Afghanistan, but markets continue to hover at all-time highs. Are we just complacent here, or is this part of, there is no other alternative, Tina, if you will? Where else are you going to put your money besides U.S. equities?
Yeah, as humans, we're deeply saddened on the lost lives we've seen in Kabul. And as investors, they are sidestepping it right now. We did see a new all-time high in the S&P 500, nearing the 50th of the year of 2021. So I think to your point, Jill, the Fed policy, the accommodative state of the current administration is going to push the Fed's balance sheet above $9 trillion. On top of that, we have another $4.5, nearly $5 trillion sitting in cash. That's a whole nother stimulus package. So I think the trajectory for investors is going to continue to be risk on. And that's being highlighted and illuminated by Fed Chairman Powell. But yes, there are a couple of headwinds, a couple of curveballs that we are just not prepared for. But I don't see that being more of a 2 to 5% pullback because of all that cash, because of that accommodative stance, not just at the Federal Reserve, Jill. It's also the ECB, Bank of Japan, as well as PBOC.
All right, Jeff, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.